Still with banks, and Bank of Queensland reported half-yearly results reflecting the hammering that the state of Queensland took over the last recent months. Net profit after tax was down 45% to $50.4 million. Not the best moment for Chief Executive David Liddy to announce he'd been stepping down at year-end. Under his decade at the helm, shareholder returns increased 145%, as against the market's 118. I spoke to him a short time ago. David Liddy, welcome to Late Line Business.
Thanks, Ticky. Nice to be with you.
Well, when I spoke to you in October, we talked about your record profit, and you said that bad debts had likely peaked, but of course since then we've had floods and a cyclone.
Yeah, we have. Queensland's been devastated since we announced the full year results in October, and today we announced that we'd had a bad debt record of $134.4 million, which is obviously quite incredible for us.
How much of that was due to the natural disasters?
Well, we booked a $45 million provision in February, specifically around the flood impact here in Queensland, and we're still working through that. We've probably viewed that we've taken a conservative approach to it, but at the moment, we had about 900 customers impacted, both small businesses and residential customers, so that's starting to flow through as we talk now.
But there were also some quite large exposures, I understand, as a result of property and construction loans.
Yeah, mainly two shopping centres, which we announced to the market in December, and we've had to take revised valuations on those shopping centres, and that formed its way into a specific provision. It's regrettable, but that's business, and we are lenders, so we're going to have bad debts.
Did your owner-manager model have anything to do with the bad debts?
No, not at all. These were large exposures that were run through a specialised area of the bank.
You also had a welcome rise in your net interest margins. Presumably, as with other banks, your cost of funding is coming down. What's your outlook for rates later in the year and your strategy for that?
Okay, well, look, yeah, it was pleasing to see an increase of 10 basis points in our net interest margin. It's still a very, very competitive environment. The cost of funding is coming down, not as rapidly as I'd like. We've got, give you an example, we've got a $500 million rollover of the first government guarantee debt we took in October. Now, that was priced for us at 265 basis points. Now, we could cover that tomorrow through our surplus liquidity, but if we refinance that in today's market, it's somewhere around about 150 basis points. So that's obviously got an impact for NIM as we go forward. Look, I suspect as Australia's economy restabilises itself and comes out of, basically the doldrums, and we've certainly here in Queensland, we've got a long way to go, and our growth forecast here is, just over 1% this year and a little bit more next year. But the rebuild program in Queensland will stimulate, retail, tourism and so forth. So I'd expect, my gut feel is that interest rates will probably be on the increase towards the latter part of this year.
More broadly, what do you think of the government's reform program now? Do you believe that they will be able to do much significant, as they say they will, towards productivity improvements?
Oh, look, I think it's a step in the right direction, Ticky, but look, it's only a step in the right direction. I think, the main issue that I see in the financial services landscape is, the power really does sit in four hands, and that's the four major banks. But having said that, it is a competitive environment out there. You only have to go out and look at the deposit rates, and that's starting to come off a little bit in terms of the heat in that market. But the home loan has just started again, and you've seen some of the major banks enter into quite an aggressive campaign to win over home loan customers. So the government is trying to say that a lot of these measures will assist competition. I think they'll go some way towards it. It certainly won't level the playing field, which we had pre-GFC.
Yes, you're talking about the competitive and sustainable banking system proposed reforms that we've been looking at. Are you confident that much of that will go past legislation?
Well, I hope part of it does. Certainly covered bonds, I don't think it's going to be a big benefit for the smaller banks, but certainly for the larger banks it's going to open up a new form of liquidity and funding. and it's good for Australian. You know, we'll have a fixed interest or a boost of the fixed interest market here in Australia. So, look, those things I think are important. Some of the other endeavours that the government are trying to put in place, I am less confident that it's going to have a major impact on competition.
And your outlook for the bank's full-year profits is about the same as last year?
Look, we've continued with our range of 175 to 195 million of cash normalised profit after tax for the full year. I think that'll probably be at the lower end of that range rather than the higher end of that range. We'll maintain above system growth. We'll maintain our forecast in terms of a cost-to-income ratio of 45%. And, you know, the growth in our underlying business is strong, and I'd expect bad debts, if you like, to normalise back to perhaps where they were 18 months ago rather than what we've just experienced.
Now, you're the longest serving bank CEO. Down the track, are we going to see some boardroom activity from you as a board director?
Look, I'm certainly not retiring. I'm entering a transitional period of regeneration, if you like. Look, I've got an interest in lots of areas. Certainly, if I was offered positions as a non-executive director, I'd certainly look at those. You know, I'm involved with children's hospitals, and I'd like to continue that. I love sport, particularly the real game of football, Australian rules, so I'd like to get more involved in that back in Sydney when I move back.
Well, David Liddy, I hope you'll come back and talk to us about your full-year results before that all happens.
OK, Tiki. Look forward to seeing you.